Alrighty, so here we are looking at the markets, and we've been watching this here for the past, let's give or take 6 minutes, and just wanted to give a little impression as to the times when you definitely just want to stay away from the market. This market has picked up a little bit of news out there, but the market has been running something like 200, almost 200 pips here in a matter of 6 minutes. Okay, so this is why you definitely don't want to take this market lightly, or at least risking your capital. It's all about preserving your capital, and the market is really just putting into a bit of a reaction here to some news talking about the ECB and some other central banks around the world basically lowering their reserve requirements. But when this type of stuff happens, you have to be very, very careful with the markets. Right now you can see how they are pulling back off of the 35 even level in the euro, but most importantly, the important thing is that at any time this market could run back up. So the way I'm looking at it here is that you have to be very careful with these type of environments, and they could rip your heads off. So I'm kind of speechless, because we have never really seen this, where in a matter of, this is a 2-minute chart on the right hand side here, you can count the bars, 2, 4, 6 minutes. The market ran from 33 even all the way to 35 even. In 6 minutes it's run 200 pips, and this is why you have to have a high amount of respect for the markets, and know that at any time, if you're not preserving your capital, if you're not putting in your stop losses, if you are not respecting what can happen, then you are definitely going to catch yourself on the wrong side of one of these moves, and it will blow out your account. So even if you think that you can time these, there is no reason why you should not be protecting yourself. Okay, I was able to test this up here at 35 even. It's a psychological level. I took it short and went ahead and took 10 pips. There's no reason for me to just try to catch every bit of this move. So one of the things that you got to know is that if you're on the wrong side of this, where if you try to short in these areas around the midpoints here at 34 even, you can see that it ran another 100 pips. So you have to take your losses if you get caught on the wrong side of this market. And most notably speaking, these are the type of days that we have to be really, really careful about, and know that they can happen, and they are outliers. They do not happen very often, but the preparation and knowledge of them happening will keep you ahead of the rest of the other people, or should we say traders out there that are caught off guard, probably who've been pinched on this and whatnot. So this is really just a training exercise. You can see here, this is the hourly chart right here on the left, and the market has literally overtaken our whole entire range for the day, and you can see that we've even taken out yesterday's high. And most importantly, one 10-minute bar has been just taking everybody out, and you can see here the micro time frame type of stuff here. So if you don't wise up, this will wise you up, and this is hopefully a really, really good demonstration as to what can happen. So this is hopefully it doesn't have to happen very often, but I want you to know that it can happen. So good luck, and hope it helps. Alright, so this is wanted to do this recording about this video here to see if this trade that I'm taking is going to work out. This is a good demonstration as to this environment. I was talking about this being a flagpole, and what happens is that this market moves up very aggressively. It moved up something like 200 pips in a matter of 6 minutes. And the way I'm looking at it here is that what the market does is it'll pull back a little bit, create a higher level of support, and then we'll rally up to at least the level where we put in the top of the flagpole itself. So usually you're able to push even higher than that. So the measured move is to identify the low to the high of the flagpole, and then you extend that from the new level of support, and that's essentially where the market is supposed to find its culmination. So you can see here that the low of the flagpole is at 32.97. The high is right around 35 even. Let's just call it something like 200 pips. And then if you were to push down to 34 even all the way up, that would push you somewhere up in the 36 handle. Okay, so don't think that it can't happen, because I think that this is going to, it. You don't want to think that it cannot happen. Anything can happen. We'll be talking about this over the past couple of minutes. But right now you're running into a little bit of support or resistance here. And like I said, the idea is that this market basically creates a bit of a continuation pattern up into the 36s. And we're basically going to mimic this flagpole type of scenario here, and you create this flag type of environment, and then what happens is the market breaks out, and then we create a new flag, and then maybe even potentially another flagpole. We may get another flag, but the idea for me over the course of this morning is to track how I am trading this. Right now you can see here this higher level of support, and you can see that the market has come down to these levels twice, and it's been able to hold. So that's going to allow you to take a trade and basically limit your risk, because you're taking it right at this 134.14 level, and you know that if the market doesn't hold up, you can see that it's going to be very evident that this isn't holding, and then you're going to have to get out of your trade. So just keep in mind here that you really the idea is to pick these basing points where the market has proved to you that it's been willing to hold up, and that's really how I'm taking this opportunity. Again, really focusing on these two levels where the market has told me that it's willing to support this market, and that's where I'll try it. Okay, anything other than that is going to be a mediocre trade, and most importantly, it's going to be probably a higher risk trade. So we'll check back here on this as it develops. I'll be back in a moment. Okay, so we've been talking about this trade here developing, and remember we're talking about the idea about how this trade should develop. Remember, the market basically creates a big flagpole, and then it just breaks out of the congestion area. So you can see here that the market pulls back, finds support, and then it rallies. So that's what we're looking for here. You can see that the market is basically pushing right above 35 even, which is putting in new highs of the session. And this is what you want to see. So this is the continuation order flow for the market, and we're just going to keep monitoring this trade to see if we can push up to it looks like 36 even is going to be the measured move. If you take a look at the at the pole here, usually what happens is you take this flag pole and then you measure it, and basically use that, and coming up with the measured move is taking you somewhere up to 36 even from the base of the support level. So that's going to be what I'm looking for, is a move up into the 36 even level. We'll check back here in a moment. So now that we've been looking at this trade develop, what I want to do is talk about how you're managing your stops. Usually people have complications with that. So what you're looking at are the higher basing points. You can see if you were to get in at that 34.14 level, you have the higher low there at 34.25, and then another one up at 34.50, and then you're able to put in a higher low. Right now the one is like something around 34.60, but you can see that these levels, these basing points, are really where you want to move your stop to. The market has a tendency to try to retrace them, and that would be your next aggressive stop, would be just right where this previous basing point is. That's going to be the best place where the market is going to be looking to drive price down into, and that's really where I always pay attention to, is those previous basing points. So that's kind of how you want to, hopefully that's going to give you a little bit of insight into how to manage your stops. We'll be right back in a moment.